Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Saturday, April 26, 2025. What a week for the bulls. Leaves me with the question, do broken downtrends imply clear sailing ahead for the U.S. markets? But wait, it's more than broken downtrends. It's at least two O'Neillian type follow-through days and some massive breadth thrusts. That's a tongue twister. So lots of reasons to be excited, but is it time to go all in or can we wait a little bit? So let's take a look at the markets. Again, my name is Jeffrey Scott. My old email address, which works fine, is hgsidoc@gmail.com. Now I go by marketmripro@gmail.com. And oh, by the way, there's always supposed to be one @ sign there. So sorry about that. This session is for educational purposes only. Anything I might recommend should be taken purely in the spirit of education and not investment advice. The intent of the video is to demonstrate how I use tools for top-down analysis and how I apply them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy, sell, long, short, options, spreads, any stock mentioned in this report. Trading stocks and options should be considered risky and you should always consult with your financial advisor before making trades. And I do have tools in multiple platforms, but I am an independent trader. If you're looking for my wealth charts presentation, I typically do those Sunday night and post them Monday morning at stocksanddocs.com. I really appreciate the support of becomeabettertrader.com and the wealth charts community on that site. But here I'm going to talk about a different program. I'm going to talk about a program that I recently launched called Market MRI Pro. If you like these videos, you can subscribe, hit the alarm. We'll talk about my Google group in a second. You can sign up for the Orange County meeting, June 6th through 8th, Residence Inn and Suites, Tustin, Orange County. Greg Mills at gam72054@aol.com. Well, I know who some of the speakers are going to be. I will be there live. Dev Kashov will be there live. We're hoping, well, not hoping, we're planning on having John Person Zoom in. Chris White will Zoom in from England. And I've got an initial okay, but I'm waiting to get confirmed from Matt Caruso from CarusoInsights.com. So those are some dynamite speakers. And they'll be, mostly the time will be speaking from in the room, but Zoom works fine. Love to have you there. It is a low budget meeting. We don't open it up for internet until we fill the room. If you sign up, you can't come. You'll always get a copy of all the recordings. And typically I do PDFs of my decks, so you get the decks as well. If you sign up, can't make it, and we go to the internet as well, you'll get to watch it on the internet. But oh, by the way, it's $300 no matter how you plan on watching it before the end of the month, and then it goes to $400. I mentioned my Google group. It's called Top Down Trader. I gave up having a mailing list. I got tired of being called spam. I've been called worse things, but having all these emails come back saying spam was too much, and I was only sending notes to friends and family. So you go to Google Groups, excuse me, you sign up for Top Down Trader and how you want to be notified. And every day I send you a video and some commentary on the market. And if there's things that happen during the day, there'll be some additional notifications that you get. I always like to look here and remind myself that recessions do happen, and that for those of you who have not lived through a bear market in a recession, double your worst market, and that will be what happens in a recession. Just a whole different ball game. The gray bars here, represented a recession. Those recessions occur after the yield curve, which has inverted, flips back. Well, we've done that on the 10-3 months to 10-2 year. We will have a recession, but we'll probably have other signs before that happens. A lot of people thought with the Trump um, tariffs we were going to get there, but it looks like for now maybe not so fast. If we look at high yield index options adjusted spreads, you can barely see it here, but if I highlighted this, you'll see it's turned back down. We spiked during times of financial issues, of recessions. We're not spiking. Now, what thing did concern me is we went from positive to very negative on the Fed diffusion index, a measurement of manufacturing. And usually, recessions don't have to occur because you weaken there. But if you get a recession, it usually starts when you're in below minus 20. So some things to be concerned about. I myself don't think it's imminent, and that's what matters. Know your news and earnings. I would say this is a earnings and newsalooza week, like take it off of Lollapalooza. Why? Look at the news. We had a break on Monday. Notice there's no Fed speakers that made my list. We've got Case-Shiller Homes and Confidence and Jolts on Tuesday. We got ADP employment, GDP, and the PCE complex on Wednesday. We got jobless manufacturing, construction, auto parts on Thursday, and we got the monthly employment report on Friday. So except for Monday, lots and lots of news. And oh yeah, look at the right-hand side. A couple companies you may have heard of: Amazon, Apple, Meta, Microsoft, all have earnings. So it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Let's go on to the charts, and we'll come back to the PowerPoint in a few minutes. There's something I wanted to show you, and I did it in the PowerPoint. All right, so let's just start with the daily breadth, and this will give us a sense of what's going on in the markets, or at least what they were like at the end of the day Friday. Now, for those who haven't seen this tool before, I've been doing YouTube videos for probably as long as YouTube's been around. I have a small following. I don't market myself. A lot of people came from going to the Ian Woodward meetings in Palos Verdes Estates back a decade ago. And I used a lot of different programs. And one of my users, followers, said to me, I can build you a platform that can chart your indicators real time during the day and allow you to avoid using other platforms. And so I said, okay, and this is what we got. So this page I leave on one of my monitors all day long, and it really gives me a sense of what the market's doing. Upper left-hand corner, we have a number of market ETFs. We're going to add dollar, volatility, and Bitcoin, I think is what we agreed to, maybe a 10-year yield. And you could see Qs are up 1.1 or finish up 0.1 Friday. Spider 0.73, Russell minimally positive, and the Diamond's minimally positive. Volatility was down. Over 5 days, it was a wow week. Q's up 6.4, Spider's up 4.6, Russell 4.05, and the Diamonds were up 2.5%. A massive week, and what you could see here, we went out at the high end of the daily closing range. So really strong week for the markets. Down here is a volatility at the bottom of its channel, which is great to see. Over on the right-hand side, you can see the NYSE and the NASDAQ, new highs and new lows, and then the new highs minus new lows. And you can see it at 4 different time frames. And if we just look what we see, the NYSE is clearly turned positive on the perspective of the new high, new low, while the NASDAQ is trying. Still short term is turned positive, but the longer terms are still negative, but they're getting closer to neutral. Down here, take 4 indexes, S&P 1500, NASDAQ, and NYSE, and ask yourself the question, what percentage of sectors are positive, industry groups are positive, what percent advanced on the day, and what percent are above the midline of the Bollinger Bands. News alert: for the first time in forever, more stocks are above the midline than below. That's a beautiful sign of a market turning more bullish. As we look here, you can see half the sectors were up versus all the day, or versus not 10 out of 11 the day before. 44% of the industry groups were up versus higher the day before. 43% of the stocks were up. So even though the indexes were up okay, it was a kind of a flat session. Similar in the NASDAQ, 55% of the sectors, 46% of the industry groups, 48% of the stocks, and on the NYSE a little weaker, 36, 46, and 46 as well. So even though the indexes were okay, especially the Qs and the spiders, it was a flat day on Friday. If we look at the S&P sectors and we look at performance, discretionary tech communications, feels like we're back in 23 and 24. What was weak? Materials, financial, utilities, staples. So materials, I think, reflects the gold. The rest of them somewhat is the more defensive plays. If we look at the week, I think that's important to look at here. And you could see on the week, that's 50-day. That's not what I wanted to show you. You could see staples, real estate, utilities, the things that are the most defensive were the laggards on the week, which says good things from a market perspective. If we continue to look at what we see, we could see on Friday most of the sectors closed at the top part of their closing range. And if we go back here to one-day change and look below, these are various themes. So what was working, solar, clean tech, software, artificial intelligence, blockchain, semis. So again, it feels like we're back to a risk-on, tech-driven market. The bucket showed us that we have come to a more neutral appearance where we're not overloaded on the underneath side and we're not yet overloaded on the right-hand side. Now the NASDAQ did have some outperformers and you started getting stocks, even a few stocks above the Bollinger Bands. This is a very neutral appearance. It has no signal to be concerned about the upside or the downside. And frankly, after what we've been through, that's actually a pretty big improvement. Market breadth, looking at daily charts. On the left of here is the NYSE. On the right is the NASDAQ. And you can see both of them. Well, the NYSE was modestly up. The NASDAQ had a much stronger session. But look at this breadth thrust here in the stocks above the 17-day or 20-day moving average. We're getting to the place where we get reversals. I'm not saying we're going to get a reversal. Not at least from that reason. The same thing on the NASDAQ, while the 50 and 200 stocks above those are going to move up slower. Then we have new high, new lows, positive on the NASDAQ, on the NYSE, negative on the NASDAQ. AD line, was negative on both, despite some positive indexes. And up-down volume was positive on both, and no new signals on the bottom. So it just tells me, again, this is all telling me, at least the daily briefing and the market breadth, that it was kind of a modestly good day, but it was a 50-50 day for most stocks. Now I have a built-in timing model, and I really rely upon the weekly and the daily charts. And you could see at the bottom of each chart is a green or red line. When that goes red, my slow timing model tells me to be out of the market or be short. When it's green, it tells me to be in the market and be long. So you could see that on the weekly charts, we're still in a sell signal. If we look at the daily, take a second to switch. On the daily, the spiders and the Qs and the Russell actually turned green. So how do I understand that? It tells me the longer, excuse me, the intermediate time frame is down. The short-term time frame is up. So we're retracing in an intermediate term downtrend. Why do I know it's just the intermediate term? Because if I look at a monthly, and I don't do this often, we actually tested the monthly this week and we held above the WMA. Only the Russell has turned down on the monthly, and clearly the Russell has been the one beaten up the most. Let's take a look at the indexes. And this is where I think we have to be a little bit careful. If you look at the ones across the top, the spiders, the Qs, the diamonds, they all have basically the same pattern. They've all been hammered. They've all tried to get above the 17-day simple and failed, but they've all now broken above that red line, which is a trend line resistance. The fact that we've broken above them, and then a shorter term on the diamonds and the Russell here, that's where we broke the downtrend. And that's something that makes you really optimistic. And since they're all similar, after I look at the VIX and the dollar, I'm going to spend a little bit more time with the spider. The volatility continues to come down. Perhaps I'm a little bit bothered that it hasn't come back down to its resting level, but it's coming down, and the dollar is bouncing around here after coming well off of its prior highs, and it was up a bit, 0.2 or so on Friday. Now let's look at the spider. And I like to look and give us some more time. And I ask the question, is it clear sailing? Well, the breadth thrust that we've seen, the breaking of the downtrend line are great, but we still got an area, well, we're at an area of resistance right here. Say we break through that. I've got a 50 and a 200 I got to get above. If I break above those, there's probably some more resistance in this area. So we are going to continue to have to move against a series of resistance points and overhead supply. And oh, by the way, in a marketplace where all it takes is one more comment, unfortunately, about tariffs, and the market goes up and down, which is not, well, easy to plan for. So I asked myself, do we have any other periods of time to compare it? So let's look at a couple of things. 1998 came down, broke the 200, ran up to the 200 and the 50, and we failed. Came back down. Even though we traded during the day lower, I would consider that a successful retest, and then we were off to the races. So I asked myself, are we headed to a retest, to a failure at the 50 or the 200, back down for a retest before we go higher? Certainly is possible. How about 2002? We ran up and failed. And notice some of these really long white bars. Bear market rallies can be ferocious. And we failed, came back to a retest. And I'm not sure if this market went up right away. I think we actually went down again. And then we have 2008, where it looked like here that maybe this was it. Pull back, failed again, retest before we went higher, and oh, by the way, we failed here. So a lot of things in there would say to me that I'm not sure that we're done going down. All right, sorry, I had stopped for a second. Cleveland just picked Shedeur Sanders in the 5th round. You almost got to feel sorry for the kid. Although it's still great to be drafted in the NFL, he's still going to have probably a decent career, and it's probably a good place to go, but wow. That must have been painful. So back to the story. This was a great week. It was a great week. Follow through day, follow through day. Actually, these two are the follow through days. And here we are breaking above trend line. But I'm still worried about the resistance overhead. It may turn out to be nothing. We may just blow right through it. Doesn't mean you should be short? No, heck no. You need to be playing this to the upside, in my opinion. That's my education comment. But I'll tell you that I still have cash on the side, and I'm not giving a long leash because markets like this will fail. Doesn't have to fail, but it certainly can. You can see gold came off the high. Silver has rallied significantly, gave up a little bit on Friday. Oil struggling to get back above the 17. Natural gas broke all the way down below the 200 after struggling to get above it for so long. And both the 10-year and the 30-year came down as well. So I take all that, I come up with my market assessment 20 minutes in, and I'll tell you, it felt good last week to have long positions. It felt really, really good. Probably one of the best, well, if not the best week of the, it's probably the best week of the year when I looked at my overall performance. That was the good news. I still am concerned. I think that the news flow is bothersome, and the news flow is the thing that makes me concerned even more. All right, if we look at the ratio charts just to get a sense of what was working, this is Bitcoin. The rest are S&P 500 sectors, and those sectors are basically even the Bitcoin are ratio charts versus the S&P to look for relative strength. So you can see Bitcoin's been strong. Technology has turned up, as has discretionary and defensive staples, utilities, real estate, and healthcare have turned down. And then I get to my favorite place, which is the layout. And the layout is where I have my scanners, my grid that's real time during the market hours, and my charting. So I use some proprietary kind of, sort of, but not really. It's just how I display them. This here is called the high jump. When it's over 95, then mathematically it's extended. If it's minus 95, it's mathematically descended to the downside. I use a 17-day green, 50-day white, and 200-day red on my charts. This here is an IBD not the same, relative strength, heavily weighting the recent performance. Here is regular volume. These are my impulses. The first one's called the EMS, which is a trading system. The CPR gives me buy-sell signals. And then I have gap, volume, breakout, and momentum. Squeeze, then a Wilder's PSAR. Down here is relative strength versus the spider. What you want to see is relative strength breaking up above the moving average. It's a ratio chart with a moving average, and this is OBV with a moving average. Over here, I duplicate all those things with how many of these dots were up, how many were down, how long did the bongo, which is this guy, which is my trending indicator, did the daily turn positive or negative, how long on the weekly. Then I have what I call the short-term momentum, intermediate and long-term momentum, relative volume, looking for what's moving, especially intraday, OBV, and then relative strength and weekly relative strength. So a number of different things that I can search by. When I say relative strength, it's relative strength versus the spider, and then the number, it tells me how many weeks since it turned positive or negative. Now the way I look at the market is I start with my list, and my list are stocks in the NYSE, Amex, and NASDAQ, and then I filter them for $1 and 100,000 shares, and then I have all of those stocks are in my list here, 3,400. Now under top down, I break it out into by sectors and industry groups. And then I like to analyze the markets to see what's leading, what comes to the top. And so I'm going to show you 3 or 4 different ways that as a top-down guy I might slice and dice. One way is to look at what moved on Friday. Take the top 3, communication, tech, and energy. Interesting energy there. These are the industry groups in those sectors. Rank them by top 10. Our top movement, and what do you got? Solar, oil, internet, software, computer, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So not much in the way of energy, only 1. These will then be the 513 stocks that are inside these industry groups. And what I want to do is I want to filter them first to remove anything that's below $5 or 500,000 shares. Now I'm left with 275. So what I like to do is I like to then rank them by 2-day momentum. And let's just take a look at them and see what comes to the top. So the one that comes to the top is Now, ServiceNow. And this is one that we looked at over the weekend, I think, or during the week, had a big move on earnings, which continued and actually looks kind of interesting here. You notice the blue dots, and I don't buy based upon the dots, but I want the blue dots as something I could scan for during the day. So on this day here, I was able to see during the day what was going on. And you could see on this specific day, we broke out relative strength and volume. So that one looks interesting. Wouldn't be my favorite, but it looks interesting. The next one is Charter. This is I think a tower company and a communications company breaking out from the 50. I could go up in here and get the fundamentals and see earnings came out the 25th. So that must have been good. And we just know that they made $8.70 and the revenue is $13.66 and they don't pay a dividend. This is one that goes up during bull markets, and boy, does it come down during bad markets. But you can see the move that it had. That's a monthly chart. All right, what else we got? Let's see if anything looks better. VeriSign. Looks great, except it had such a big move from 252, 20-point move, almost 10%, 8% move. It's now extended. I'd rather look to see this come back before I got it. HubSpot, I don't even know what they do. It's a tech company. The other thing that we have here, besides to see if they had earnings come out, earnings came out May 8th, okay, is we've got the news built in too. Sharp sell-off, got above the 200, about to break above the 50. Relative strength and OBV look good. I just don't know enough about this to be excited. I do like this one, MicroStrategy. This is one that is very much tied to Bitcoin. I think I showed you before the relative strength of Bitcoin versus the S&P, and this is broken out. And this is basically a leverage play on Bitcoin. If Bitcoin is strong, this thing goes up. CrowdStrike is one that's breaking out as well in the application software space. Couple of big days. Were the earnings out? Earnings came, nope, not to May 3rd. So I will go through this list. Spotify, I like this one as well. After a nice little W correction, it looks like it's breaking out. Meta, I'd rather buy things above the 200. Duolingo is one we talked about on Tuesday, I believe, or Wednesday, Tuesday earnings. And I really like this one here as well. And just going down the list, Cadence, this is one that long term has done very well. Stubbed its toe of late. But is this one getting ready to take off? Intuit, tech software. Monday.com, an Israeli AI company. So it's just a way of identifying some of the leading industry groups and sectors. Now I could turn off the sector piece, and that opens up a lot more industry groups. And now I've got some things that are in the top 10 that we didn't see before. So I might add them and see if anything now looks interesting. And I can tell you one of my favorite stocks to own, although I've competed against them for a long time, is going to be on this list. Let's see if I can find it. It doesn't matter. I'll just type it in here. Drug wholesalers. I've sold companies to two of them. I sold one of my companies to, was called ABC at the time, which is Cencora. And the reason why I like this, look what this thing has done over the last 20 years. And yeah, it sells off when the market sells off. But for the most part, these have been just fantastic, steady performers that pay a dividend. So Cencora looks interesting here. It looks like it's wedging, perhaps. And boy, a breakout above this line would be interesting. Cardinal Health is another one that I have sold a business to, or my partner and I have sold a business to. Another steady performer breaking out here. And the other one is McKesson, MCK. And there's a term loose and tight. Um, this is tight. This is McKesson, just a great performer. Haven't sold anything to them yet. But that is one of the industry groups I saw here. So what's different? Tesla made it to the list now. So Tesla, if you base it on earnings and fundamentals, the earnings were 40% lower with missed by 34%. The revenue was 9% down and missed by 9%. Not by that. They don't pay a dividend. They have a pretty significant high PE. You're buying it because Elon Musk is coming back. You're buying on it because they got favorably treated in the tariff world. But you're really buying it because of well, perhaps on the auto driving, which legislatively may be improved. But it's really a bet on Elon Musk, who probably be thought of better after he retires than he is now. But a lot of people like Tesla here. I do too. So that's interesting. Lilly has earnings this week, so that makes me a little bit nervous. I don't like jumping into stocks right before earnings, but if you have some, Lilly's holding up nicely. They had this big gap came up because their oral of the weight loss diabetes drug seems to be leading. GEV, this is a power electricity generating plant company, among other things, and they had really good earnings. A breakout here, I like this one a lot. They had fallen on hard times because a lot of the power is being used by data centers and by Bitcoin miners, and with Bitcoin falling and the data centers becoming in question by some of the other issues in the market, they fell off. I do like it. And just looking down the list here, another one that I like, APP, which was a big mover, came back to pretty much almost close this massive gap. And it's got great earnings growth. This one feels like it wants to go higher. So that's two different ways. And then another thing I could do is look for signals within these groups. So I have one signal I like called a multi-time frame CPR buy that requires it to be in a weekly uptrend and now go into a daily uptrend. And when we apply that to this, Charter pops up. There is that signal. And then so does GRRRR, Gorilla Technologies. Reset. Now it's another uptrend. All right, let's kill all those. All right, and then you have the bottoms up approach. And I'll admit there's something I really like about the bottoms up approach. So I'm going to show you a couple different things. So if you've been watching my wealth charts video, you'll know that I like to do this. I'll go to 500,000 shares and $5. I'll look for pullbacks and uptrend. I'll hit OK, and I got 151. I'll rank them by dots, and I'll just start going through EHC, Compass Health. I believe they're a Medicaid provider or a physician organization. Big gap up. I would look at the news, make sure they're not being acquired. I guess they beat some estimates. All right. And let's look at the earnings. Yeah, they had a 15% surprise on earnings and a 2% surprise on revenue. Big gap up, and of course now they're extended. There's Charter again. FHI is one I like, Federated Hermes Inc. Bank breaking out here, regional bank, I believe. VeriSign, we looked at this before, just concerned that it got extended. H1, another bank, rather it's buying in a stronger uptrend. CSIQ, talking about I'd rather have an uptrend, but I saw movement in First Solar. CSIQ came out. Did it have its earnings? Earnings are coming. Did they have some news? Solvency problem. Well, we don't want to buy that. And the reason why that one made my interest was another stock that's been in a big downtrend has been First Solar, and solar stocks have been looking a little bit more positive. Now, is this something that may be interesting here? I wish, well, it makes money. Who knows? CEP is, don't know what Cantor Equity Partners does. I remember seeing this and I didn't do anything about it. Um, Maybe it was a SPAC that took off. XP, let's look at this on a monthly. You can see it was a high flyer that's come down off of lows. Look at the weekly, sort of a double bottom here. Look at the daily, taking out the 200. Um, I don't pay attention to high-low jump when I'm sitting on the 200, by the way. This one I thought looked interesting. So this is another approach, is to do top down, look for stocks that are pullbacks and uptrends and then take a look at them. All right. Another thing I like to do is make another scan. This one didn't have much in it. 2-day not the EMS up. 2-day momentum, price greater than 5, volume greater than 500,000 shares. And none of these really got me excited. I don't know what DXYZ is. Destiny Tech 100 sounds like an ETF of tech stocks. Um, of all of them, this was the pattern that I liked. I just have to figure out more about what this is. What this scan is looking for is those two momentum dots in a row. I like the pattern, pull back to support, held and just broke out above the 50. And then another scan that I might do is combine a couple. Let's look for a new EMS cross up with a CPR buy, price greater than 5, volume greater than 500, hit OK. And I got 3. That Encompass again, which we looked at, Charter, which you can't get rid of, and Macy's, which surprises me, kind of down in its dumps. So I've looked at a number of different ways. Then I have the list of, we'll look at these real quickly, a short list of, thought I had a list, maybe I don't have a list of, oh, I must have killed that list. I thought I had a list of the mags. Let's just look at them very quickly. Amazon, it broke above its resistance, still got a 50 and 200 to cross. Why rush? Plus it's got earnings coming up. Meta also has earnings coming up, similar appearance. Netflix, which is great, probably getting a little bit overbought, extended, but what a run off of earnings. Google, surprised because their earnings were good and they gapped up. They just had a crappy finish on Friday. They did break their downtrend. I'd put this in the middle of them so far. How about Mr. Softy? A lot like Google without the reversal. I like this one breaking above the 50. And then lastly, what about Apple? Again, Apple, Google, and Microsoft have kind of moved into sort of a more of an intermediate feeling. Now, I'm one that believes that these markets go back to all-time highs. These will be leaders, so you could look at something like the MAGS ETF to participate. Kind of looks like Microsoft. And then the other one, NVIDIA. Broke its trend line, but boy, it's still in a downtrend. And I think I was being generous on that trend line. So I had a couple of other things. Let's see if we haven't. These are a couple others that I thought were interesting that made my attention. AVPT, pullback and breaking out. Something else we just looked at looked just like this, maybe CSIQ. I like that pattern, especially when the market sold off. MIR, Miriam Technology, the similar pattern breaking above the 50. VST, this is another one of these energy plays tied to data centers. Um, eh, Sitting at the 50, a breakout there would be interesting. One of my favorites that I did take a position this week, I announced it on my daily videos. Palantir has done a nice breakout. One that was my pick of the year in mid-December when I got questioned at a meeting is CSE. Oh, so many stocks have an SE in it. Okay. And this one was a great leader, got hammered, now just broke above the 50. I think it looks interesting again. Broadcom, yeah, another one of those stocks that's just broken above the 200 and the 50. Another one I took a position in last week is Toast. I just love this company because I hated the old days when they took your credit card, you didn't know what they were doing with it. And then even worse, when they had those ink things for copying, much better. Get the email or the text breaking out above the 50 there. It looked interesting. One that we talked about, I think, last weekend or the weekend before, which has had a big run, is Root. Must have been last weekend. I like this one a lot here. Took out the 50. Still like it. And then two others. KGC. The gold stocks have taken a little bit of a hit as gold's come down, but I still like Kinross Gold. But after a run like this, no surprise it's going to take a rest. And then lastly, my favorite healthcare stock is Halozyme. And doesn't look like much. The weekly looks a lot better, or monthly rather. Imagine if you had a company could take somebody's existing drug, which is going off patent, and they can give it another 8 more years of patent life. Drug companies don't make money when you go off patent. So they have a technique of taking IV drugs, drugs that go in your vein, and reformulating them so you can inject them under your skin. And two of the biggest drugs in the market are three: Darzalex from J&J and Genmab, Opdivo from Bristol Myers, and Keytruda from Merck. All have partnered with them and all have products in the market, which is a defensive strategy against the IRA drug reform as well as going generic. So cool stuff. Hope you have a great week. Hope you got something out of this video. I think 42 minutes, you get a lot of information, maybe too much. You like it, give me a thumbs up. You don't, tell me why. Either email me or put in the remarks. Constructive comments are always appreciated. I am holding a live seminar for free. Next weekend, I will post something in the top-down trader Google group today. I'll send out an email to top-down members with the sign-up information. Anybody's welcome. You don't have to own anything of mine. If you're not in the top-down trader, I can ask you one thing. Why not? It's free. And not only is it free, I'll give you a free coupon to get some discount on my technology. See y'all on Monday night.